Welcome back to Dukascopy TV. I'm Derm McDermott. I have Bruno Estier back in the studio today, and last week we had a look at the possible US rebound having an impact on European equity. Bruno, welcome back.
Good morning, Doreen.
So how far can this extend?
Yes, last week we looked at the US dollar index, and what we noticed is that it was basically coming into a wedge and rebounding possibly. It can rebound further. We see that what it has done last week is a relatively sizable move, moving outside of the upper boundary, which is the resistance trend line, and it should continue toward 82, so another 2%, 3%, probably at a slower pace as what happened just here.
But can a further rise of the US dollar also have an impact on equity?
Well, we need to discuss that a little bit in detail. Here we have basically a discussion about higher dollar, meaning lower commodities, meaning slower growth. If there is no growth globally, there is no growth in the US, and therefore no tapering, and we see that we are back to stage one. We don't know what impact it has. So we really need to look at the backstage. And the backstage here is given by two things. Sentiment and position. The first chart that we have since 2001 is a partial view on position. It is in a one family of funds, the amount of money which goes into the cash compared to the money invested in equity and sector funds. In other words, if the people have a lot of cash, like here, in 2008, at the end of 2008, that means they were very fearful. And when they don't have a lot of cash, like at the end, or the beginning of 2007, that means probably they are more complacent. What it is now we're really at the lowest point since 2001, but it's still declining. So we're probably here in the first stage of a warning.
But Bruno, the US actually went further up until 2007.
That's true, and at least here we notice that when we hit the low in 2005, it went further. But we need to see other aspects, and which is sentiment. And there we switch to this other long-term charts, which is a combination of opinions. A newsletter writer are professional people who comment on the market. And of course, we see that from 1997 till 2013. And we had the S&P on the top part, and here a percentage of the people who are bullish or bearish. 0% bullish, 100% bullish at the top. Of course, you never have 100% people bullish. However, you notice that when you come to the level of plus 70%, then you have these red arrows here, which are very nicely displayed by this website. And you see that it occurred at period where it could coincide to a top.
And is that an immediate top?
Well, if we zoom what happened in the recent past, namely the last 3 years, we had 4 of these instances above 70%. And out of these 4 instances, and the most recent one was in May, the one before, earlier in the year, was not the sign of a top, but just indication of a sideways move.
So does that actually mean it's quite useless?
Well, it's not useless to show the big background. Of course, it's not the only tool that we have. And we remember if we looked at the S&P 500 here on a daily basis for the last 6 months, we had another measure of sentiment, which is the measure of fear, the so-called VIX index. Okay. And when the VIX was very high in this year at the 20% level, then that corresponded to bottoms. We had that also in June, and that corresponds also to bottoms further back in history. But the question here on this part is the following. Now that we are moved in the last 10 days above these 1740 levels, above this wedge resistance ceiling, if you wish, does that mean that we continue to go all the way up to higher targets above 1775, or do we go into a correction? the move of last week, which was the rise of the dollar, has induced already a little sideways pose. And we need to see if it can continue. I have the impression, given the momentum, which is slowing down here, that we might go along the red path, which in the end, if it goes all the way to December or the end of November, if it stays above the long-term trend line, that would just be a pose like the one preceding in the previous months of this year.
Bruno, thank you very much.
You're welcome.
And thank you for watching Dukascopy TV. Do stay tuned as we provide the very best economic and forex updates. But for now, goodbye.